Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for October 7th, 2009. Quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Hello everybody. Wanted to mention the Reserve Bank of Australia unexpectedly raised interest rates to 3.25% yesterday, and that caused the dollar to lose ground pretty much across the board. However, only the New Zealand dollar and the Aussie dollar set new highs. We're now cautiously bullish on the dollar as we think the U.S. can still stage a comeback based on risk aversion and flight to safety, and we still do think that there are more rough waters ahead. What we saw as a dollar rebound a week ago has now turned into a retracement and a road for further dollar losses. We are now looking for confirmation for this possible scenario. And what we're going to do now is cover the support and resistance levels for the next 12 to 24 hours. Currently looking at the euro dollar, currently trading at 147.18. Our first area of resistance can be found at 147.50, followed by 148 and 148.50. Above 148.50, we will see 150 as the last level of resistance. First level of support could be found at 146.80, followed by 146.20. Below 146.20, we'll see 145.60, 145.20, and 144.80. What I want to show you here now is the retracement. If we take a look at the highs to the lows, we are now above the 61.8% retracement level on the Fibonacci. What this typically means once we break above the 61.8% retracement level, and this is never an exact science, but this would typically tell us that the retracement from this high at 148.40 to the low at 144.80, it has now retraced. Now, if the Fibonacci, the way this works is the retracement level of 61.8% is typically the last level that we would take a short trade off of a bounce at this level. But now that we're broken higher, it leads more room to the upside for the euro. Now again, this is never an exact science, and we can still see a dollar recovery, which is what we would like to see, but this is never a good sign once we break above and stay above the 61.8% retracement level. Over the next few days, we'll see if we can break this previous yesterday's high, and if so, it really is going to point for further dollar losses against the euro. That's what we meant to say when we were talking about the rebound turning into a retracement. This was the rebound that we were seeing, and this was the retracement, but the retracements we want to see up between the 38.2 and the 50% retracement level as high as 61.8, and then we'd like to see further dollar gains. So we'll see over the next few days if the scenario for further dollar losses continues, specifically breaking higher above the 148 level. Next up, we're going to look at the pound dollar. Currently trading at 159.13. As you can see, the pound hasn't had much action over the last few days. It's really consolidating here, and I think this is a good sign that we could still see a dollar recovery. As the dollar, now again, this could be showing us that the pound is very weak relative to the other currencies such as the euro or the Swiss franc. However, we would like to see dollar gains across the board, and perhaps this is a proxy for what we can see over the next few weeks. Currently trading in 159.12. First level of support can be found at 158 even. Below 158, we'll see 155 and 153.30. We've been talking about these areas over the last few days, and we really haven't seen any changes because of the limited action. First area of resistance can be found at 160, followed by 160.60. Above that, we'll see 161.50, 162, and 163.50. Next up, we have the dollar Swissy currently trading at 102.70. Once again, I want to point out the retracement and the rebound that we were talking about on the dollar Swissy. If we take the rebound from the low here to this recent high, the retracement has now gone below the 61.8% retracement level. This is not good for us, especially if we want to see further dollar gains. Over the next few days, we'll see if this break below the 61.8% retracement level is legit. However, we would like to see some gains and bounce higher, but this break below the 61.8% retracement level is not good for dollar gains. Once again, current price is 102.70. First area of resistance for the dollar is going to be found at 103.20, followed by 103.80 and 104.50. First area of support for the dollar Swissy can be found at 102.40, followed by 102 and 101.30. Finally, we're going to take a look at the dollar yen, currently trading at 88.77. Over the last few days, not including yesterday, we saw a lot of consolidation with a few wicks down to the 88.20 level. With this yesterday's break lower, we should see further dollar gains. Further dollar losses as this close lower is now showing us momentum in the yen's favor. A close and a break below the 88.20 level will fuel yen gains to the 87.12 level, and once we break the 87.12 level, we'll start talking about the 85 level. At this point, we'll just add the 85 level as an area of last support for the dollar. We think that is as low as it's going to go, but again, things change on a daily basis, so just keep that in mind. So once again, first level of support is 88.20, followed by 87.12, finally 85. First area of resistance could be found at 89.50, followed by 90.20, 90.80, and 92. Above 92, 92.50. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section where we cover our current trades and potential trades. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for October 7th, 2009. Until tomorrow, good luck trading.